doing? I mean, Biden has been the threat to democracy here.
Yeah, this is unbelievable projections, and the things that De Niro was saying Trump was going to do to this country is what Biden is doing right now. I mean, the Democrats are turning this country into a third world hellhole. I mean, it is unbelievable to watch this trial play out. Even some of the most vitriolic Trump haters can't believe how weak this case is, and all the things that have come out in this court case, and the crimes that Michael Cohen has confessed to on the stand are far more severe than what they're actually accusing Trump of.
Yeah.
And another thing about all these actors, maybe we shouldn't take any sort of political advice or life advice from adults who pretend for a living.
Yes, great point. White House Press Secretary says he's buying the dip. And the reason he's buying the dip is, number one, high probability that June is a positive month. Number two, second favorable inflation data points coming in. We not only we get the PCE Friday, but then we've got the CPI coming out on June 12th, so it's right behind it. And then he says $6 trillion in growing cash is on the sidelines. Still good wiggle room.
Yeah, look, new highs normally mean one thing, and that's more new highs. And if you look at where the Fed is right now, there's some debate if we're going to get a cut, when we're going to get a cut, but there's no real chance that we're going to get another 25 basis points or 50 basis points increase in interest rates. Okay, we have an expanding economy, and it's very debatable about whether this economy is slowing down or how much growth we're going to get, but we're not looking at a recession. We're not looking at something falling off a cliff. And earnings this quarter were raised intra-quarter in terms of estimates. Okay, that almost never happens, and estimates may be too low for this year. So when all those three factors converge, it's a tremendous time for stocks to run. And the fact that we're seeing new highs now really means it's all these bullish factors are aligning against a backdrop where nobody's out there and overtly bullish. There's nothing frothy. There's no investor saying, hey, this market's going to continue forever. So I seem to think we're going to continue rallying far past what most people expect. What are your thoughts, John?
To be the hot time for the market.
Well, higher interest rates, mortgage rates, 7% or above, Mike, has locked out many people from actually taking out that mortgage. They're walking away from deals.
Yeah, look, there is still stress in the banking market because you should see about 175 basis point spread between the 10-year Treasury and the 30-year mortgage, and that's closer to 250 to 300% in that range right now. So you have the stress in the banking market, I think in large part due to the Fed's manipulation of the mortgage market, buying so many mortgages during the pandemic and the expansion of the balance sheet, and now trying to reverse that, making it really hard for things to go on in the market. And remember, the developers...
That's a good point. I didn't think about that. You're right.
Remember, the developers also need to borrow money to go out and build homes. And most people that are in the building industry now very much remember 2008, 2009, 2010, and they will gladly build slowly so that they do not have, the trauma that they had in their lives, almost losing everything, and a lot of them losing everything in the post-financial crisis world. So this new supply is not going to come on the market that quick.
Can I jump in there? One interesting thing, though, you point out about new home building, because a lot of the new home builders are the ones that are offering the incentives. They're saying, hey, we'll give you a couple of points off the mortgage if you'll sign. We'll give you extra things in that kitchen, an extra garage component, whatever, to get. They really are working more than I've seen in past years to get buyers in the door. That's the developers.
Yes, and their stocks are doing well, but it's the number of home buyers versus the supply coming on the market is nowhere near. You still have a huge supply imbalance, and look, this is an issue that's going to play out in the election with youth voters becoming more and more disenfranchised because, look, after the financial crisis, so many people wanted to live in apartments. They wanted to live on top of each other, this live, work, play concept. And then during 2020, you had a decade of that reverse itself very quickly, crowding out a lot of people from the housing market. So look, this is going to take years to sort out if it gets sorted out at any point in the next decade.
Emily.
I think we're over.
Your thoughts?
Yeah, so for Biden to, just to touch on Emily's point, to come out and say, hey, I'm better than the other guy, when you look at the crosstabs of all these polls, so when you see a headline number come out, what the pollster has done is they take a bunch of data and they try to predict who's actually going to vote. But inside the crosstabs, you can see how people actually feel on a raw data basis, and who the electorate believes is more competent, who they believe is better on the economy, who they believe is better on inflation, who they believe is better on immigration. Trump is winning these by 20 or 25 points. And when you look at things like who do I believe will be a more competent leader, you're in a 20 to 30 point swing from 4 years ago. Okay, you cannot undo these things over the next 6 months. And it's these crosstabs, especially among Hispanic voters, among younger voters, okay, and independents. This is why they are freaking out, because Joe Biden needs to win by about 4 points nationally to be able to carry the Electoral College. So anything that has him tied with Trump or down to Trump or only up 1 is going to be an Electoral College landslide for Joe Biden. And the reason why I believe Joe Biden will remain in the ticket is because when you have these direct polls between Trump and Gavin Newsom, Trump and Kamala Harris, the gap between Trump and the other opponent widens. So out of the Democrats, Joe Biden polls the best, which is why he is there. So look, if you're a Trump supporter, if you want change right now, things are looking very good for you for November.
Well, I mean, look, welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me right now is Payne Capital Management President and the host of Payne Points of Wealth podcast, Ryan Payne, back with us. Also with us is Mike Lee this morning. Great to see you. Thank you for joining the conversation. Mike, thank you so much for being here. I want to get your take on the macro story because we got a busy week of retail earnings on deck this week. We've got Dick's Sporting Goods, which crossed moments ago. Take a look at the stock. It is up almost 8% with a double beat. It also raised its full year guidance. Dick's Sporting Goods now up 7 2/3% at $210. We will also hear from Dollar General, Best Buy, and Kohl's tomorrow morning, followed by Costco and Nordstrom after the bell tomorrow night. Your reaction to the earnings season so far, Mike?
Yeah, so the consumer discretionary sector on the whole has had a pretty spectacular quarter in terms of earnings, but most of that is from Amazon, and that's more from cloud computing than actual retail sales. So what I think is we are seeing is good results against very muted estimates. And so the story of this consumer and the resilience of the consumer seems to be weakening around us, but I think Wall Street is a little too bearish on what we're seeing right here. And so Dick's is up spectacularly because they're expecting 3% growth, 2 to 3% growth in same-store sales going forward from 1 to 2%. This is not gangbuster numbers. I mean, they beat spectacularly on earnings, but the other thing we're going to see in retail is inventories are very, very low. And so as that restocking comes in, that's not only good for GDP, it's what you call a whiplash effect. And so you end up getting higher margins, better earnings. So I'd expect some of these surprises to the upside as we get through the week with some of these other retailers. But I don't think we're going to get an over bullish, super bullish consumer growth that a lot of people have been talking about. But that being said, the consumer is not falling off a cliff, and a lot of noise is being made about credit card debt and the consumer slowing down. But if you look at debt to income, debt to liabilities across every single income class, the consumer is much healthier than they are now, than they were 5 years ago or 10 years ago. So as much as credit card debt and debt for the consumer has been rising, incomes and assets have been rising faster.
So, but you're not expecting a recession?
No, I don't expect great growth, but I think we're going to see muted growth, but definitely expansion throughout this year and into the future.
Well, the growth is also has been all about AI. I don't want to get your take on that, Ryan, because NVIDIA hit another all-time high.
I'm with Ryan on utilities. If you're not invested in AI and some of these stocks scare you, the energy demand for the first time in forever is expected to start increasing year over year. And that cannot happen without utilities. So like an ETF like XLU, which just buys the whole sector. This is an unbelievable space. It's like your sleepiest sector of the S&P 500, but it's now going to start growing, a great place for conservative investors to look and to benefit from this move of corporate America to artificial intelligence.
All right, we will leave it there. Great to see you this morning.
Thanks,
Thank
Maria.
you so much, Ryan. Ryan Payne, Mike, you're with us all morning, and we appreciate that for the rest of the hour. Quick break, and then